Let's bring in former Fed Governor Randy Kroszner, talk about, Randy, maybe the data first. A lot of the coverage this morning sort of hints that we're beginning to see some residue around tariffs on this print. You agree?
So we're certainly seeing a little bit of that. If you look at particular categories like toys, furniture, et cetera, you are seeing a little bit higher inflation than we'd seen in the past. But if you look overall, it's hard to see a big impact yet. And that's the big debate. Is it coming or is it not coming?
Is it because services is acting as a bit of a salve at this point?
Yeah, that's a very large part of what's happening, and the large part of especially CPI is housing services and shelter services that are only very indirectly affected, at least so far, by the tariffs, and we haven't seen really much action there.
Why don't they just cut rates? Because now this is the fifth month in a row where we got below than expected or in line inflation, and then if things get ugly or inflation starts to perk up, then they can pause or raise.
Sure, and I think there are at least a couple of governors who would make exactly that argument. I think the majority is probably going to say, well, let's just wait and see a little bit longer. The challenge is you can keep waiting and waiting and waiting, and at some point you have to make a decision. My guess is that there'll be a reasonable consensus by September to make a move. I don't think you'll get there quite yet. Their preference would be to continue to pause until they start on a more consistent way of bringing things down, that every meeting or other meeting. I think they're likely to cut at not in the July meeting, but the rest of the meetings, each meeting for the rest of the year.
So you don't see headline inflation becoming a bigger problem?
So I'm kind of with the way that Chris Waller has articulated things. Yeah. That it's been, this is likely to be a one-off. If you look at, all imports are about 13% of GDP. The tariffs are, they're on, they're off, there are exceptions. And so it's hard to see that it's going to have this enormous impact. And in particular, it's hard to see an ongoing impact. Fortunately, the short-term inflation expectations came down from the elevated levels that they were earlier. And that's really where you have to worry. Does this get into something that is longer term, more into all the cracks in the system? And at least so far, we're not seeing that.
No.
I will guess, though, Randy, that you're not in favor of cutting 300 basis points.
That seems a little far as I'm concerned. So that would go a little bit further than I would go, I would have to say, at least at this moment.
This is what the president does, right? He creates a lot of leverage, and then they'll cut a little, and then that'll be, they'll find somewhere in between. The one thing, Randy, is that the political pressure on Powell and, the importance of Fed independence. I mean, you can disagree with him on policy,
sure,
but for them to go after, and it's not clear that they're doing this, but there's some signs, from OMB director, from Kevin Hassett on this renovation nonsense. What would be your thinking on whether, if this progresses, how big of a risk that would be?
So hopefully the Jay can continue as he's been doing, of just like lots of slings and arrows. That's what Fed people have to have elephant thick skin. They have to just be accepting of that. This is a little bit more public than usual, but there's an awful lot of criticism. I mean, gosh, I was at the Fed during the global financial crisis. People weren't saying the nicest things in the world about the Fed at the time. So, this is not unusual to have negative things being said. As I said, probably the volume is higher. And so hopefully that he and his colleagues can just continue to focus on the economic data, do the things that they think are the best things to do. And that's what the markets want. They want a Fed that's going to be deciding based on data. And I think that's what the markets are expecting.